Stripe is the largest venture-backed private fintech out there. Despite its size, leadership has no interest in going public, at least for now. In this video, we'll explore Stripe's past and present IPO ambitions, look at reasons why it's staying private, and explore the current limited opportunities to invest in Stripe pre-IPO. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com. In today's episode is all about Stripe. Stripe is the largest venture-backed private fintech company out there, and it's one of the top companies that our readers want to invest in. It's at the top of our fintech IPO wish list, and definitely in the top 5 of our overall startup wish list. These are companies that we would love to see go public, but just haven't gone public for one reason or another. Why do we want these companies to go public? Well, that makes it easy for retail investors to participate in the growth of these innovative companies. And even if we don't want to invest individually in these companies, they're added to the indices, they're added to the index funds that we invest in, and it allows investors worldwide to participate in the financial growth of these companies. While they're private, only a small subset of investors can participate. And Stripe is especially challenging to invest in because it puts limits on its cap table and it really tightly controls who's allowed to invest. If there were to be a Stripe IPO, it'd be a massive event. They could raise a ton of money, and it would just be a huge event for the markets as a whole. In a way, Stripe is the antithesis of what we want to see from private companies. We want to see them go public, but Stripe has refined this maneuver to provide liquidity to early investors and employees through tender offers. We'll get into the tender offers in a little bit. So in this video, I'm going to go through a brief timeline of Stripe's progress and how we got to where we are today. Then I'll talk about their previous IPO ambitions, and yes, they wanted to IPO in the past, and how they've changed their tune since then. We'll also look at why they're not going public and the maneuvers that they're executing to avoid having to go public. Then we'll look at their future IPO potential. I still think Stripe will go public someday, and we've got some clues from the Collison brothers about when they might go public or what they're thinking about. And then finally, we'll look at a few potential investment opportunities pre-IPO so that eager investors who really want to participate in the pre-IPO growth of the company can do so, although there are restrictions on who's able to participate in those investment opportunities, and certainly the risks are higher not being in the public markets. So back in 2009, 2010, Stripe set out to build the economic infrastructure of the internet. They wanted to build a platform that allowed developers to build payments into whatever they were building online, whether that be a mobile app or a website. Back in 2009, that was really the beginning of the mobile app explosion. Certainly the internet was doing its thing and growing at the time. It was founded at that period, 2009, 2010, by Irish brothers Patrick and John Collison. They were in the US for college. They had started a few businesses and sold them. And these guys were young, somewhere around 18 and 20. So they started Stripe to simplify online payments for developers and startups. Payment platforms are ubiquitous now, internet transactions for finance, but back then it was still in its infancy and no one had really taken over from a developer standpoint. Of course, there was PayPal, but PayPal didn't solve the problems that developers had integrating payments seamlessly into mobile apps and websites. The company was part of the 2009 Summer Y Combinator batch and launched its first product after that. They received early backing from Elon Musk, Peter Thiel, and Sequoia Capital, and these are really top-tier investors, obviously, with Elon and Peter Thiel. Over the years, Stripe expanded globally and introduced a wide suite of financial products, including billing, fraud protection, crypto, and now it's moving into stablecoins. We can tell that Stripe is an innovative company, and it's not going to be left behind with crypto, and it's made some acquisitions to make sure it's part of that economy. With its hold on the current payment infrastructure, it's definitely positioned for growth as stablecoins and international transactions replace the legacy systems that are too expensive and too slow. So everyone knows that Stripe is not IPOing and they don't want to IPO right now, but back in 2021, they actually were interested in IPOing. Now, if you go back to 2021, IPO volume was off the charts. retail investors and institutional investors were pumping up the prices of these IPOs, and the IPO window was the widest open it's been in several years, more so than the previous decade, and more so certainly than now, 2024, 2025, 2026. Robinhood went public, Coinbase went public, and there were a slew of other companies that were using SPACs to go public, and several companies started preparing for IPOs in 2021, having seen the receptiveness of all these other companies. And Stripe joined this group of companies that declared their intention to go public into 2022, but the IPO window shut closed in 2022. Dozens of companies were planning to IPO in 2022, but had to cancel those plans. Stripe, the most notable among that group of companies. But back in 2021, July 9th, 2021, we got this article from Reuters from Echo Wang and Anirban Sen, who, by the way, are still working together to break stories. They got this exclusive that said online payments firm Stripe takes the first step toward a blockbuster listing. And that first step was that they hired a law firm to help with preparations to start to go public. At the time, it was 11 years old. It was valued at about $95 billion. So Stripe is seeing this opportunity where all these other companies are going public and raising money and watching their stocks go up. Coinbase and Robinhood were two of them among that group. Coinbase had IPO'd in April. Robinhood was ramping up to their IPO on July 29th of 2021. Not wanting to miss the party, Stripe starts digging into it. And then later on in the year, September 10th, we got an article from Bloomberg. Crystal Tay and Katie Roof reported, and we still follow both of these reporters, but it said then that Stripe is discussing a public listing for 2022 with bankers. Stripe was still deciding between a traditional IPO and a direct listing. I believe Coinbase did a direct listing, and it would be one of the biggest companies to ever go public if they had gone through with it. So Stripe was moving along as if it was going to IPO. The next step would have been hiring a bank, then filing confidentially for an IPO, and they were really on their way to IPO in 2022. Now, toward the end of 2021, the IPO window was capped off by the Rivian IPO, which was heavily subscribed to and was very overvalued. So Rivian marked the peak of the IPO frenzy, and by 2022, early 2022, we were still getting companies talking about moving forward, but the stock market started to falter, and especially some of these recent IPOs and SPACs, public prices started to fall, and 2022 just turned into a really rotten year. The broader market continued to fall throughout 2022, and shortly into the first half of 2022, everyone realized the IPO market was closed, and by the end of the year, you could see it in the data that the IPO volume had stopped. SPAC values crashed. Many stocks fell from their peaks. Remember, Stripe had told their investors and their employees that they were going to IPO in 2022, and 2022 was a bust for IPOs. And so at the beginning of 2023, Stripe sent an email to its employees and said, we're going to decide on whether or not we IPO within a year. And I applaud them for doing this. There were a lot of people that were hinging on those stories that came out about a potential IPO, and there's employees who have been there for a decade who hold stock options and shares, and early investors who want to cash out. And when this company was worth $95 billion, people were starting to think about how they're going to spend that money. The private values fell considerably in 2022. During that year, they cut their own internal valuation by 28% to $74 billion. Stripe laid off 14% of workers in November of 2022, and the internal valuation fell even further by January of 2023. They cut it to $63 billion. So at that point, Stripe decided to email employees and say, hey, we're going to provide a liquidity event either through an IPO or otherwise within a year. And that report came out at the end of January 2023. But less than 2 months later, we got an announcement from Stripe that said Stripe announces a new round of funding and plan to provide employee liquidity. So within less than 2 months of making this announcement, Stripe abandoned their IPO ambitions and said, we're going to provide liquidity through tender offers. A tender offer is a private transaction that just happens behind the scenes. It's advised by an investment bank, probably the same banks that would take a company public. So the banks are happy, they're still making money. And the offer allows employees to sell some of their shares to investors. And usually these were investors who are already on the cap table. And by doing that, they're not increasing the number of investors on the cap table. Some venture capital investors likely established special purpose vehicles, SPVs, to bring in additional investors. And when an SPV is on the cap table, it counts as one investor instead of bringing in a bunch of individual investors. So by providing this liquidity through a tender offer, they could avoid going public and avoid the chorus of employees saying, hey, we want to cash out some of our shares. So Q1 2023 was a really pivotal moment in the history of Stripe because it had this decision if it was going to pursue an IPO or not. and it chose to not pursue an IPO. And as far as we can tell, that decision hasn't changed. They intend to stay private for the time being. And we're hoping to see some signs of an IPO, but at this moment, as I'm recording this, and this is summer of 2025, Stripe has not indicated their intentions to go public. Stripe did not pioneer the tender offer maneuver. SpaceX had been doing this for years, and by SpaceX doing it on a very large scale and doing it fairly regularly, I think they do it every 6 months or so, Stripe had coverage to be able to do this in the industry and just say, hey, well, we're going to do what SpaceX is doing, and it's going to work out for our employees. If our employees are happy and our early investors are happy, then we don't need to go public. In February 2024, Stripe announced another tender offer to provide liquidity to employees. It brought in some of the same old investors and maybe some new investors here or there. But it was their way of kind of doubling down and saying, hey, we're not moving forward with an IPO, but we're satisfying our investor needs. And by the way, anybody who's not an investor and who wants to invest in us, especially you retail investors, we don't really care about you. We're worried about our current shareholders, and we have really no interest in bringing in new investors to participate in our growth, even though their growth is a result of public use. And so this is one of the things that gets under my skin is I want to see more IPOs, and especially when you have customers who are funding your growth and who are a big part of the success of these companies, you'd like to see those people be able to invest in the companies. And Stripe is just another case where we're not getting to see that, and we may not see it for some time. April 12th, 2024, we got a little more detail about that Q1 2024 raise. It says they raised $694 million in a tender offer. Was announced in February. They agreed to let some of their shares be sold at a $65 billion valuation, which is a significant discount to where it traded a few months later or a year later. And then another few months later, June 17th, 2024, Stripe co-founder expects another employee stock tender offer. And that article by Paige Smith at Bloomberg reported that in an interview with David Rubenstein, John Collison said that he's in no rush for an initial public offering. That was June 17th, 2024. November 2024, we get another article from Bloomberg, Katie Roof and Emily Mason, Stripe to buy shares in a tender offer at a $70 billion valuation. So you see this broken record here. Stripe is saying to employees, hey, if you want liquidity, we're going to give it to you. You can either sell our shares back to us or sell them to an approved buyer. But at this point, we don't have any interest in a public offering. Now, some might argue, and I've seen this argument online, that all these tender offer transactions are an effort to clean up the cap table. And by cleaning up the cap table, that's one thing that these companies may do heading into an IPO. But we do know that Stripe has had tight controls of its cap table, so it may not need to do that. So why is this cap table that I'm talking about important? So the cap table is the list of owners who own equity with a company. And there's software called Carta that helps companies track this. But you start at the top of the list and you've got the Collison brothers and they own X percentage of the company. We don't know what that is. That's not public. You have the early investors who own a piece of that. And again, we don't know what their initial investments are, and we don't know what their current stake is. We may have some information about their investment amounts, but after all these tender offers behind closed doors, we really just don't know. But there's a rule with the SEC that says that a private company must register with the SEC if it has more than 2,000 total shareholders or more than 500 shareholders who are not accredited investors, and if the company has more than 10 million in assets. Well, Stripe certainly has more than 10 million in assets. By keeping a tidy cap table, they stay under this 2,000 total shareholders limitation or threshold. And they do that by using SPVs. If you want to bring in more investors, you create an SPV, and that creates an entity on the cap table. And that SPV may have dozens of holders underneath it. And these entities, everyone needs to be accredited. So as long as they can keep that threshold under 2,000 of total investors or total shareholders and under 500 for total non-accredited investors, they don't have to register with the SEC. Now, if you go to the SEC website, you search for Stripe Inc., you'll find some filings out there. And these are Form D, which discloses some transfer of equity transactions, but it doesn't have to be very specific about it. It does list some investor names, and usually it's people who are executives or venture capital investors, but it doesn't really have to disclose the amount, so they can keep that undisclosed. And Stripe is definitely going to try to keep as much private as possible to keep information away from its competitors and certainly from the public. So over and over again, we saw these tender offers. And then in February of 2025, we saw an interview on the All In podcast. The Collison brothers were on there. And of course, the hosts asked, why don't they go public? And they actually had a couple good reasons or valid reasons that helped support their cause, that they don't want to go public. So let's give you some data points of why we don't want to go public. First is that they can provide liquidity to employees and investors who want it. They found a way to do that. The banks are happy to be paid to do that. So if they can provide liquidity to the current investors, then that takes care of a big problem. New investors who want to invest, they're not shareholders, so they don't really care about people like us who want to invest in the company. Another argument is that there's a myth that being a public company makes you more disciplined. John, I believe, he said, people generally make the argument that it is critical for discipline to be a public company, and he calls that hogwash. Says you don't need a 25-year-old Fidelity analyst asking you questions to double-check your CapEx, blah, blah, blah. They believe they can run a tidy, disciplined, efficient business without public scrutiny. Another reason they gave was that it's not unusual for large financial companies to stay public. They cite Visa was a private company for 50 years. Goldman Sachs was private for 130 years. Morgan Stanley waited 70 years to go public. Citadel, Jane Street, Vanguard, Fidelity, these are all private companies you can't buy stock in. So Fidelity and Vanguard and other financial institutions can stay private. Why can't Stripe? They also make an argument that staying private is better for shareholder value, better for current shareholder value, and that they can run the business better without that public scrutiny, without having to try to achieve certain earnings goals every quarter. They can invest the way they need to invest for the long term by staying private. And that's the same argument that Elon has made about SpaceX. Long-term investments, they may take several years to develop. And so if you're going to spend a lot of money on a long-term investment in the short term, the investor community may not like that. And then the final reason, the Collison brothers, are just not in a hurry to go public because they expect to be running this company 10 to 20 years from now. This is their life's work, according to John. So they want to position it for long-term growth because they're not going anywhere. So one day, maybe they will see an IPO, but at this stage, they've determined it's not the time to do it, even though they were thinking about it 4 or 5 years ago. So if you want to learn more about that conversation, I think it was fairly transparent and open for the audience. I'll put a link in the description to it because it was helpful to see them talk about it. Part of it feels like they were making excuses or trying to justify their decision. They just don't want to do it, but they do make some very good arguments. The downside is that retail investors can't participate the way we want to participate. If Stripe were to become a $1 trillion company someday, and they don't IPO, then who's going to get to participate? And that's only the venture capital community, the employees, the founders. It's a small group of people who will get wealthy off of that growth instead of retail investors and institutional investors who don't have access to Stripe stock pre-IPO. I'm still optimistic that Stripe is going to IPO someday. I think it's going to happen. I wish it were sooner than later. Fintechs are having a very good resurgence in 2025. Circle, the most notable. eToro went public with some success. Chime went public. We've been hoping that Klarna will go through with its IPO in 2025. So if Stripe sees a lot of these companies going forward, maybe it will determine the time is right to start thinking about it. There are also several other decacorns or companies that are worth more than $10 billion in the private markets. And if those companies start to move forward, maybe Stripe will see an opportunity as well. That would include, of course, SpaceX or a Starlink spinoff, Databricks, OpenAI, Anthropic, some of those big AI names. If we see them going through, Stripe might follow suit. Revolut is another fintech that could pave the way for Stripe to go public. If their cap table were to get out of hand, if it were to get too large and too many investors started participating, then they might be forced by the SEC to register and then start moving forward with the IPO. But they've done such a good job maintaining their cap table so far, that seems unlikely. But if there's a large investor, a large early investor who wants to really liquidate a lot of shares, or if the Collison brothers want to diversify or possibly unlock some value for philanthropy, which Patrick said in that All In podcast, he was thinking about philanthropy, that might be another reason for them to go public. Or if they want to use their wealth to start other businesses, similar to the way Jeff Bezos has done, or Bill Gates, they use the equity of their initial large company to build other big companies and donate to charities. So that might be another reason why these guys could go public if they want to raise capital for other projects. Now, their ambitions could change any day. We might hear a news story next week or before this video is published that they're moving forward with an IPO or they're starting to think about it again. We just don't know. We watch the reporters who have previously reported, and from the various news outlets who tend to get a lot of scoops on IPOs, we follow those reporters, and a lot of times the leads come from the bankers, not from the Collison brothers. The Collison brothers, what they say is going to be highly scrutinized. They'd be better off if they want to leak it to come from an investment bank that would get to a reporter and get out into the public. But for now, we haven't seen anything. This is summer of 2025. And that could change. I'm not expecting it to, but we're watching every day. We're monitoring the news to see if Stripe's going to give us any clues to moving forward with their IPO. The last thing I'm going to talk about, and maybe this is what a lot of you are really interested in, is if you really love this company and you want to participate in its growth pre-IPO, because if there's no IPO and you can't invest otherwise, how can you get access pre-IPO? As I mentioned, there is a very tight cap table and it's hard to get access. The best option is to monitor pre-IPO platforms and secondary marketplaces for shares that become available. Now, these shares are highly sought after. So if shares become available, you're probably going to have to pay a premium. It may be competitive. You may not get all the shares you want. If you're looking to those secondary marketplaces to try to acquire a stake, that stake is not going to be a direct stake in Stripe. It's going to be through a special purpose vehicle, an SPV. So don't expect to get direct access to the cap table, but you may find an opportunity to buy into an SPV that's existing, or someone might be putting a new fund together to try to get into a future round or a future tender offer. That's probably your best bet, but that's only for accredited investors. If you're accredited, you can explore the various platforms. There are quite a few of them. Those platforms include Hive, Hiive, Equity Zen, Forge Global, and Equity B. Equity B is a little different because it works with employee stock options to help accredited investors gain a stake. So for all of those platforms, you need to be accredited, and you're going to have at least a $5,000 minimum, probably closer to $25,000 to $100,000 minimum investment if you choose to invest on those platforms. NASDAQ Private Markets is another one you can check out. And these are places where you might be able to find an investment stake where you can gain some sort of equity access via a vehicle or a larger lead investor who's putting together a fund. Now, non-accredited investors, you have very, very few options. If you live outside of the United States, you have even fewer options. Buyer beware, you may go exploring for other opportunities. There's new ways of investing in pre-IPO companies through tokenization. And this is very much in its infancy. So if you come across a tokenization opportunity, really vet what you're going to be investing in, because usually tokenization means it's not directly in the stock or even through an SPV. It's through some sort of token tied to that stuff. And that economy is still developing. There's still regulations that need to be ironed out. So be very cautious if you come across one of these opportunities to invest via tokenization. We're going to need to see some regulatory movement on that issue, and it's likely coming down the pipeline. I even think Robinhood is able to make it happen in Europe. There's some companies working on tokenization of private companies in the US, but at this stage in mid-2025, it's still a little dicey, and I wouldn't go exploring too much unless you have some money that you want to experiment with and you've really done your research into whatever platform you're looking for. Other than that, your best bet is going to be through one of these platforms that occasionally gets shares or access to a special purpose vehicle. And if that doesn't work, then I'm afraid you, like the rest of us, are going to just have to wait for that IPO, which could be here next year, probably not. Or in the next 5 years, hopefully we'll get something so that ordinary investors can participate in the growth of this very innovative, probably the most innovative financial company to hit the private markets over the last decade. That's all for this episode of the Access IPOs podcast. If you like what you're seeing here, hit that subscribe button wherever you watch your videos or listen to your podcast. Like us, follow us, and give a 5-star review while you're at it. It's very easy. You just have to tap the little star, pick 5. You don't even have to write a description of why you like the show. Just pick 5, and it helps me grow the show. It helps gain exposure to these topics that we're talking about. And I really do think that if we talk more and more about how these opportunities don't exist, that companies and startups will find opportunities for us to be able to invest, and that the government will eventually move. They're going to lag, but we really need some government movement in the US for us to be able to access these types of investment opportunities. And the other thing is we really want to see these companies go public earlier. And so if you're a customer of a private company that is staying private and doing tender offers to its employees and it won't go public, let them know. Say, hey, I'm your customer and I want to invest in you. How can I do that? And they'll come back and say, well, you can't. And then you say, well, but if you IPO, then I can invest. Why don't you guys IPO? And I think if customers speak up enough, eventually, more and more of these companies are going to move forward, especially when the IPO window opens, which it is right now. But we want to see it open all the time, and we want to see companies moving forward with their IPOs instead of staying private and keeping all that wealth creation in the hands of the people who are already super wealthy. That's all for the show. Thanks for watching, thanks for listening, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.